Hey there, adventurers! Welcome to Cashville, a place where every day is an exciting journey into the world of money, community, and discovery. Whether you're a curious kid, a savvy grown-up, or just someone who loves learning new things, you're about to embark on a fun-filled adventure that will change the way you think about cash forever. Today we're diving into the exciting world of money. But not just any money. This is the money that makes our town tick, helps people buy what they need, and even lets us save up for our dreams. Have you ever wondered where money comes from or why we use it instead of just trading things like in the old days? Well, you're in the right place. Buckle up as we explore Cashville, a bustling town where money is made, moved and used for all sorts of amazing things. From the busy markets where neighbors trade goods, to the shops where you can buy your favorite snacks, money is always on the move. It's the invisible thread that connects everyone in town, helping people share, trade, and build their lives together. At the heart of Cashville stands the Big Bank. This isn't just any building, it's a place full of stories, secrets, and the power to help dreams come true. The Big Bank is where the magic of money really happens, and it's the center of all the action in our town. Think of it as the town hall for everything money-related. It's where people come together to make important decisions, ask questions, and learn how to make their money work for them. Whether you're saving up for a new bike, starting a business, or just keeping your allowance safe, the Big Bank is here to help. It's where businesses and regular folks like you and me go to borrow, save, and grow our money. People trust the bank to keep their money safe, help them plan for the future, and even lend a hand when they need a little extra to reach their goals. The bank is like a helpful neighbor, always ready to support the community. But here's the thing about the Big Bank, and all banks really, they have a secret superpower. It's not just about keeping money safe or handing out lollipops. Banks can actually do something truly incredible that most people don't even realize. Are you ready to find out what it is? They can actually create money, that's right. Banks have the power to make new money appear, almost like magic. But it's not magic, it's a special process that helps the whole town grow and thrive. This is one of the most important secrets of how our economy works, and it's something you'll want to understand as we go on our adventure. Now before you grab your shovels and head for the backyard, let me explain how this works. Money doesn't just grow on trees or hide underground like buried treasure. Instead, it's created through a fascinating system that helps everyone in Cashville, kids, parents, shopkeepers, and bankers, work together to build a better, brighter future. So get ready to unlock the secrets of Cashville and discover how money really moves. Many years ago, a group of the most influential and powerful people in the country gathered together in secret meetings, away from the public eye. These were not just any meetings, these were gatherings where the very foundation of our financial system was being shaped. Imagine a grand room filled with serious faces, stacks of papers, and the weight of responsibility hanging in the air. Their mission? To create a set of rules that would guide how money moves, grows, and is controlled in our nation. These rules would affect every single person, from the richest business owner to the everyday worker, and even you and me. The result of their work was something called the Federal Reserve Act. Think of it as the ultimate instruction manual for the entire banking system in the United States. This act didn't just set a few guidelines, it created a whole new way for banks to operate, and it established the Federal Reserve, often called the Big Bank, as the central hub for all other banks. The Federal Reserve Act is like the rule book that every bank must follow, ensuring that the system runs smoothly and that everyone plays fair. It's a bit like having a referee in a big game, making sure no one cheats and that the game is fun for everyone, but here's where things get really interesting. The Federal Reserve Act gave banks a power that seems almost magical, the ability to create money. Now, you might picture giant printing presses churning out stacks of dollar bills, but that's not quite how it works. Instead, banks use a special process that lets them make new money appear, almost out of thin air, simply by making loans. When you walk into a bank and ask for a loan, the bank doesn't hand you cash from a secret vault. Instead, they create a new deposit in your account, and just like that, new money is born. It's a process that happens quietly, behind the scenes, but it has a huge impact on the economy. Of course, this isn't something banks do recklessly. There are strict rules and safeguards in place to make sure that money creation is done safely and responsibly. Banks are watched closely by regulators, and there are many checks and balances to prevent mistakes or fraud. Security is a top priority, and every transaction is carefully recorded and monitored. So, while it might sound a little mysterious, you can rest assured that the system is designed to protect everyone involved. To help you understand how this works, let's use a simple example. Imagine you're at a coffee shop with a friend, and you realize you forgot your wallet. You ask your friend if you can borrow $1 to buy your coffee. Your friend agrees, and instead of giving you cash, they write a little note that says, "I owe you $1." Suddenly you have the power to buy your coffee, even though no new dollar bill was printed. That note, or IOU, is a promise that you'll pay your friend back later. Your friend's note is more than just a piece of paper. It's a form of money because the coffee shop accepts it as payment. This is a tiny version of what banks do every day. When banks make loans, they're essentially creating IOUs, promises that the money will be paid back in the future. These promises are trusted because the banks are trusted, and that trust is what keeps the whole system running. Thanks to this system, you now have an extra dollar to spend even though no new cash was printed. It's a clever way to make sure that people and businesses always have access to the money they need when they need it. This process helps the economy grow because it allows people to buy things, start businesses, and invest in their futures. Now imagine this happening not just between two friends, but on a massive scale, with millions of people and businesses all over the country. Banks are constantly making loans, creating new money, and helping the economy move forward. Every time someone takes out a loan to buy a house, start a business, or pay for college, new money is created and put to work in the world. So the next time you see a business owner getting a loan, or hear about someone buying their first home, remember, banks are using their special money-making powers to help dreams come true. It's all thanks to the rules set down long ago, and the careful work of the Federal Reserve and the banks that keep our economy running strong. Sometimes, instead of borrowing from the big bank, businesses need to borrow a lot of money. That's when they might make a private placement. Imagine instead of borrowing that dollar from your friend, you gather a group of friends and ask each to lend you a little bit. You get the money you need, and your friends get a promise that you'll pay them back with a little extra on top. That's kind of like a private placement. It's a way for businesses to get the money they need to grow, even if the big bank doesn't have enough to lend at that moment. When you borrow money, whether it's from a bank, a friend, or even your parents, there's always an important expectation. You're supposed to pay it back. This is the basic idea behind any loan. But in the real world, things don't always go as planned. Sometimes people forget, run into trouble, or simply can't keep their promises. That's why lenders, people or institutions who give out money, need a way to protect themselves. After all, just saying "I promise" isn't always enough. Life can be unpredictable, and even with the best intentions, things can go wrong. Lenders want to make sure they have a backup plan in case the borrower can't pay them back. This is where the concept of trust and security comes into play. To solve this problem, lenders ask for something called collateral. Collateral is a valuable item or asset that the borrower offers as a guarantee. If the borrower can't repay the loan, the lender can take the collateral instead. This helps the lender feel more secure about lending out their money. Let's make this idea even simpler. Imagine you're a kid and you really want to borrow your friend's awesome toy truck. It's the coolest truck on the playground and you promise to return it tomorrow. But your friend is a little worried. What if you forget? Or what if something happens to the truck? Your friend wants to trust you, but they also want to make sure they get their truck back. So they ask for something in return, something that's important to you. This way, if you don't bring the truck back, your friend isn't left with nothing. You decide to offer your favorite toy car as collateral. You hand it over to your friend, and they agree to lend you the truck. Now both of you feel better about the deal. Your friend knows that if you don't return the truck, they get to keep your toy car. It's a fair trade that encourages you to keep your promise. In this example, your toy car is the collateral. It's something valuable you're willing to risk to show you're serious about returning the truck. Collateral acts as a safety net for your friend, making the whole borrowing process feel safer and more reliable. This simple playground example is actually very similar to how banks and other lenders work in the adult world. When you want to borrow a large amount of money, like for a car, a house, or even a business, banks want to make sure you're going to pay them back. So, they ask for collateral, just like your friend did. For banks, collateral can be things like your house, your car, or other valuable property. If you can't pay back the loan, the bank has the right to take your collateral and sell it to recover their money. This system helps banks feel confident about lending, and it also encourages borrowers to keep their promises. So, whether it's a toy car on the playground or a house in the real world, collateral is all about trust, responsibility, and making sure everyone keeps their end of the bargain. Remember how I said banks can create money? Well, the most important bank of all, the Federal Reserve, or Fed for short, is like the head money maker. The Fed doesn't actually print bills all day long. Instead, it creates money electronically, adding digital dollars to bank accounts. It's kind of like magic, but honestly, it's really just clever accounting. Let's say the Fed wants to pump a little more money into the economy. It can buy something from a bank, like a government bond, and pay for it by adding money to that bank's account. Just like that, new money is circulating. Think of the money in Cashville like a river. The Fed controls how much water, or money, flows into the river. Banks are like dams, controlling the flow of money to different parts of the town. When businesses borrow money from banks, it's like opening the dam a little, letting money flow out to pay workers, buy supplies, and grow their businesses. This keeps the river flowing and the town thriving. The Fed's job is to keep the river flowing smoothly. If there's too much money in the river, it can cause inflation, where prices go up too quickly. If there's not enough money, it can slow down the economy. That's why the Fed uses something called open market operations. It's a fancy way of saying they buy or sell things to add or take away money from the system. Think of it like the Fed using buckets to add or remove water from our river, making sure it stays at just the right level for everyone in Cashville. Now let's talk about promises in the world of money. One type of promise is called a promissory note. Imagine you borrow that dollar from your friend again. This time you write a note that says, "I promise to pay you back $1 by next Friday." That note is a promissory note. It's a written promise to pay back a specific amount of money on a specific date. Businesses use promissory notes all the time, and they can even sell these notes to other businesses if they need cash right away. It's like trading your IOU note for something you need today. See, the world of money is full of fascinating ways to make it grow and flow. From private placements to collateral and the Fed's balancing act, it's all about making smart choices that benefit everyone. But the most important thing to remember is that you are a vital part of this system. Every time you save money, spend money, or even borrow money, you're helping to keep the river of money flowing smoothly through Cashville and beyond. So keep asking questions, keep learning, and keep exploring the exciting world of money. It's your adventure to be had, and the possibilities are endless.